And welcome back, students who are taking financial accounting. And in this series of videos, we are working on the assigned homework problems for Chapter 4, the problems in Group B. And hopefully this will be the last video because it's the last assigned problem, 4-49B. Let me jump down there, get to that slide. Okay. As always, and this chapter has been, if you've watched all of these videos, this chapter has been somewhat of a learning experience for me in how to go about making these videos. I'm spending a lot of time on each and every one. If you look at the approximate times that they give for the homework problems, like for example, this one, they're saying that this takes 20 to 25 minutes to do. You can see that right here, okay, because this is 4-49B. It takes 20 to 25 minutes to do. And if you have been watching the videos, you see that I am taking up, about that much time. So realize that if I'm a student, I'm working through these. Yeah, me personally, I could get through them a lot quicker, but I am making a video and I'm giving a lot of extra information. Some of it repetitive, and like I said, I'm struggling with, when do I repeat myself? When do I go back over the same underlying concepts? And as I go forward into the next chapter, chapter 5, I am definitely going to stop repeating myself. So, and as you see it at the beginning of every video, and it may be tiring because it takes 2, 3, 4 minutes for me to say, but accounting is about understanding an application. You're watching the video and if you get it wrong, you're watching this video to understand the application side. But if you're not if you're not getting the application, then that means you're not understanding theory and the concepts, and you need to go back and watch the theory videos from the chapter. So going forward, I'm just going to give that quick little warning on every video, and I am not going to spend as much time on theory, underlying theory that have been covered in previous chapters. I'm going to kind of stick to the subject content, all right? Meaning, like, I'm not going to explain, well, how do I get, net income, all right? So you'll see what I mean by when I'm working through this here problem. So this is 4-49, and it says use the data for the problem from 4-48B. So this is all of the data. Now, I didn't look at, when I created the presentation, these slides, I don't really look at what's this, what the homework problems are. In other words, I didn't look to see what was 4-48 about, what 4-48 was about. So I just copied and pasted this to the slide. So 4-48, you should have your income statement, your statement of retained earnings, and your balance sheet. And if you don't, watch the 4-48 video and look at the solution in the solution manual to look at those financial statements, because those financial statements are what you're going to use in order to meet the requirements for 4-49. Because basically these requirements are calculating, well, let's just look here. It says number 1, calculate the earnings per share. And then number 2, the earnings per share, it's going to ask you, for number 2, it's going to ask you some, ideas about, how would you analyze the earnings per share. Then number 3, you're calculating the gross profit percentage, and it's how do you analyze the gross profit percentage. And for number 5, you're calculating the net income percentage, and number 6 is about, your analysis of it. So in order to do those percentages, you're going to need those financial statements. So this here is not as applicable. As I said, if I'm going to sit here and start out with, calculate the earnings per share for Ramirez for the year, assume that the average number of common shares during the year was 5,000. Okay, so what's the formula for earnings per share? The earnings, it's net income divided by the average shares outstanding, which they're telling you, given information, the average shares outstanding is 5,000. All right. If you you're looking at this information here, your trial balance, for lack of a better word for it, because they're not in any, in a specific order. But you have the ledger accounts and the balances in the accounts. You can see that common stock here has a balance of 45,000, but it's not telling you how many shares that's made up of. So the data is, giving you that information. All right, but you need to be able to calculate the net income. Well, yeah, like I said, I'm not going to go back over all of the theory that, and the calculation that you should have gotten from working through previous problems or from the theory video. But what you will do is you'll go over to the income statement in your solution manual, and the bottom line was that was $17,600. That was your net income. Right, so that's at the bottom of the income statement. So when you take 17,600, and you divide by 5,000, you actually get $3.52 per share. Okay, come on, pen, per share. There we go. All right, so that's number one. That's our earnings per share. Now, number two says the earnings per share. Remember, this here is for October 2014. All right, so this is the earnings per share for 2014. Excuse me. The earnings per share for 2013 was $3.27. Did the earnings per share improve or deteriorate during 2014? Okay. So if you look at it, you have to really, think this through, because if you go and you say, let me do some erasing here. If you go and you say, in 2013, my earnings per share was $3.27, right, per share. And now in 2014, my earnings per share is $3.52. Okay. Obviously, it's improved because, you're getting more earnings per share, right? And if you, think about it, what does that mean? Well, that means my net income has increased over the previous year, assuming that my shares have stayed the same, right? So if my, when you're doing this analysis, I mean, let's just take it a step further. If, let's say, I took 10,000 as I had 10,000 as my net earnings in 2015, okay, and I still had 5,000 shares. Well, now my earnings per share is 2, right? So in 2015, it's going down. Notice what I'm getting at here. Our share, just by looking at the numbers, you can say, oh yeah, my earnings per share increased. That means I'm getting, I'm getting more money. I have more money available per share. So that means the company is, earning more during that period of time. And if I do the opposite, I set up a scenario where I have only $10,000 of earnings. My earnings went down, and so my earnings per share went down. And that's the way you can look at it. So, that's how you think about the earnings per share when you're analyzing it. You just realize that it does you no good just to have earnings per share. Like, for example, if you didn't have a 2013 and you don't have, you don't have any other information other than you just calculated your earnings per share for 2014 at $3.52. That doesn't tell you anything. It's just a number. Sure, it's a positive number, so you know that, yeah, I'm making $3.50 on each, for each and every share, and that's a good thing because it is positive. But to get any value out of it, you need to be able to compare it against something else. I mean, you don't know if this number normally should be $5 per share, or $7 per share, or maybe $1 per share. You don't know that. So the value of these numbers really does come from the ability to be able to compare it against, other information, like from a different year, so on and so forth. Okay, next. calculate the gross profit percentage. All right, gross profit percentage. If you recall from the theory, I know that gross profit percentage and the net income percentage in the denominator, I just have to remember that it's net sales revenue. And since this is gross profit, I put gross profit in the numerator. If this was net income percentage, okay, which is what we're going to do for 5, yeah, I'd still have my net sales revenue in the denominator, but the difference is now in the numerator, I have net income, right? And that's how I remember it. I don't memorize each formula. I just associate the information and remember, and that's just the way I do it. All right, so you decide whether you want to memorize it or not. Okay, so it says calculate the gross profit percentage for the year, right? So where does our net sales revenue come from? You know, since it is revenue, that's on our income statement also. So you have to look on your income statement, and it's about the 1, 2, 3, 4th line down. You can see that the net sales revenue is $314,400, and our gross profit is 2 more lines down from that at $142,800. So when you divide one by the other, you end up with 45.4%. All right, so number 4 says if the, let me erase this here. If the gross profit percentage for 2013 was 42.6%, did the gross profit percentage increase, improve, or deteriorate during 2014? Right, so I have 45.4%. So yeah, it's obvious that it has increased, you know, from the previous year, and that's good. And again, if you're just looking at the number in a vacuum, if all you're doing is just looking at 45.4%, you know, it's not telling you much. You need to be able to compare it against something else. But what does the increase mean? Well, you know, think about it. If you you know, the gross profit has improved from, give me one, let's see here. Okay, I was just thinking, you know, I paused the video just real quick because I was just thinking about numbers, and that's how you kind of like can think about this. If you take and you say I have 314,000 in the denominator, okay, and let's say, now notice I'm going to just throw in a value here. I'm going to throw in a value of 314,000. Okay, that means, you know, I have what, 314,000. So 314 divided by 314 gives me 1, gives me 100%, right? So if you're looking at this 142,000 and it increases to 314,000, notice that my percentage increased from 45 to 100, right? So what that says is when I increase my gross profit in comparison to my net sales, my gross profit increase. So what that does is gives me more money to be able to pay off my, you know, selling and admin expenses. Okay, if my so for the year of 2014, my gross profit actually went up, because if it went down, let's just take 100. Let's just take 100,000 over 100,000 over 314. That would be approximately 33%. Okay, so you could see how if my gross profit goes down, my gross profit percentage goes down. And when my gross profit goes down, that means I have less money to be able to spend on my selling and admin expenses. So that increase going up to 45.4%, yeah, the question asked, did it improve or deteriorate? Well, it improved, but what did that mean? It just meant that, you know, this year we have more profit to be able to spend on our selling and administrative expenses. Okay, and that's the important thing. If I was just looking at it in a vacuum of I didn't have 2014 to compare, this is not going to tell me anything. All it's going to tell me is I have 142,000 to be able to spend on my selling and administrative expenses, but it doesn't tell me if this was an improvement over the previous year or the year before. You need to be able to compare it against something else. All right, now lastly, the net income percentage is net income over net sales revenue, which we know that is. And so for our net income, again, we're going to look at our income statement, and we're going to see that's 17,600. Boy, I can't write that 6 for some reason. And we divide that by our net sales revenue, all right? And this ends up being 5.6%. And so basically, we're looking at the same exact thing. It says here, the net income for 2013 was 4.9%. Okay, so 2014 you have 5.6%. Okay, so again, yes, the net income improved. Okay, and so that means when we're looking at, we've retained more money to be able to, in comparison to, we've been able to save more money as compared to the money we've earned. Remember, this is money we've earned, okay? And on a per dollar basis, we're saving more money because our net income has increased. So for every dollar that we've earned out of this 314, we're actually earning a little bit more. And if we had gone and if I throw in a number here of say 10,000 divided by 314,000, that's only going to be about 3.14%. Okay, so you can see when we have less net income, our percentage goes down, meaning we have less money available, that we've earned out of whatever we've retained less money out of the amount of sales that we've made. Because remember, it's sales or revenue. What am I writing here? It's our revenue less our expenses. Okay, so we're looking at our revenue here, which gives us a profit or loss. So if we're spending more, our profit goes down, assuming our revenue stays the same. If our expenses go down, our profit goes up, okay, assuming our revenue stays the same. So that's kind of like the relationship that you have to think about when you're doing this type of analysis, okay? And again, it doesn't work in a vacuum. I mean, yeah, it's nice to know that I have a 5.6%. I mean, if this was a negative 17,000, in other words, we had a loss, well then, yeah, I can say, oh, we're not, we're overspending. We haven't even broke even. We don't have it, we're just spending way too much as compared to, what we're actually bringing in. In other words, I earned $100 and I just went and spent $105. Okay, and so that's a negative percentage, and that's what that will tell me. So yeah, you can look at a number by itself, and whether it's positive or negative tells you, if I'm profitable or not. But again, the real value comes in comparing year on year or period on period. Okay, all right. So with that, we're done with the videos here for chapter number 4. And as always, if you don't understand something, telephone and speak with an instructor. And as I said in chapter 5, I'm going to take a tact of not covering the same amount of information as much. So I'm going to be relying more on, the solution manual and referring you to theory if you're not getting something. So with that said, good luck in your studies, and I'll see you for chapter 5.